I'm Christy Duffy for Smart Trend News. Morgan Stanley analysts raising their third quarter EPS estimates for Murphy Oil Corporation to $1.16 per share following its second quarter earnings beat. Analysts wrote, quote, clean EPS of $1.41 versus Morgan Stanley's estimate of $1.21 and the Street's estimate of $1.21. E&P $219 million versus $221 million was in line on slightly better than expected volumes, 190,000 barrels of oil equivalent per day versus 186,000 barrels of oil equivalent per day. A big beat in R&M, $83.8 million versus $38 million, was driven by strong U.S. marketing, $70 million, making up for some turnaround-induced weakness in the UK. Guidance offered, EPS guidance of $1.10 to $1.15 is below the Street forecast of $1.28, as production guidance was revised down to 180,000 barrels of oil equivalent per day in the third quarter versus Morgan Stanley's estimate of 209,000 barrels of oil equivalent per day and 194,000 barrels of oil equivalent per day for fiscal year 2010. The primary culprit is a failed coiled tubing unit on the Kikeh production platform during a well workover, reducing production to 100,000 barrels per day until a rig arrives to complete the workover in early fourth quarter. The bank sees fiscal 2010 EPS of $4.75 versus the Street estimate of $4.67 per share, and for fiscal 2011 EPS of $5.90, which is in line with the Street estimate. Morgan Stanley maintaining its overweight rating on the stock with a $71 price target. I'm Christy Duffy for Smart Trend News. For more news and market analysis, make sure to subscribe to our YouTube channel. That's Trade the Trend. Also visit our website, tradethetrend.com, for more headlines.